Hello.
Good morning.
Good morning, Licia. Hello, everybody. We have no Mark today. Mark sadly has some family business that he has to deal with, rough business. But we're here. We have lots to talk about today. I'm Andrew Giovinazzi, your other option at Option Pit, Director of Education. And with me, fortunately, we have Licia, Queen of the Candles, Duchess of Doge, to walk through charts and levels and economic news. And I think let's just start with the biggest news. Besides my Flash 5 thing, which we launched at Option Pit, but that's for a little bit later. The biggest news is the CPI saved the market, right, Licia? What do you think about that?
It sure did, right?
Andrew,
I just want to say, I remember, the big number days when we stand downstairs in the pit, we'd go down early to listen and watch and see what's going on, right? We'd have CNBC on and all that on the TV. And from what I remember, it wasn't what the number was. It was what it was compared to what was expected.
Yes.
And I had kind of forgotten about that until CPI on Wednesday. They expected 4%. And it came in 2.9. So woohoo, not bad, right?
Right.
Because they expected 4. I just find it so aggravating, irritating. There's still inflation, right?
Well, and it's higher than it was last year. Okay.
Yes.
So,
yes.
And we might have discussed in this show the numbers coming out, how the CPI number has evolved will be kind, right? Has evolved over the last 4 years.
Right.
But it's still going up and the Fed still wants to cut rates.
Still wants to cut rates.
But we, of course, know that the bond market doesn't want any of that. And I think that has caused a lot of turbulence in equities over the last month because we had what we'll call just the relief rally after the election, since, all the buildings were still standing, the sun was still shining. That was another thing. Do you remember days like trading floor days where like the market's just like selling off? So I guess it doesn't do that anymore since the Fed has stepped in and fixed everything. But in the old days, stocks actually sold off.
Yes.
There were limit down days. And as a market maker, it would just usually, some days those could be quite huge, to be honest. Other days, though, they could be just awful, right? Like you just want the bell to ring. And you would swear like the sell-off was so bad that when you walk outside the door of the SIBO, right, like the sky had fallen, the taxi cabs would be off the side of the road, there'd be mayhem, the
bars would be filled up.
Yeah, exactly. But you would go out there, but the sun's still shining. Like for everybody in the business, it was a terrible day. For the average, everybody else, they're like, they don't even know yet, right? Because they haven't seen the news. So, of course, the bars would be packed around all the exchanges. So that was like, but this was, these number days or tough days in the market. That's sort of how I guess we grew up. Like we grew up in the business like that. So when you see the CPI number, I guess we could go to some charts.
Sure.
But just how the market really, so you can show people how the market really reacted, on this number. And things were starting to look kind of gloomy, I thought, at the beginning of the week, to be quite honest.
They were. Well, they were questionable, let's say that, before CPI came out. S&P had traded down. It did hit my median line and stopped it with a really nice hammer, Andrew, which is a change in trend candle.
Mm-hmm.
And sure enough, held it. Tuesday, not a lot, kind of confusion, right? Up and down and closing basically close to unchanged. Not sure, waiting for the number. And then sure enough, CPI comes out, gives us the big boost. And now we're bull flagging, and looks like if we take out yesterday's high, we definitely going for that 6,000. 6,000 on SPX, looks like 6,100 on Yes, many.
So we were talking about this a little yesterday, and I am not the trend line drawer, but every once in a while something kind of like sticks out to me here.
Yeah.
You were kind of, and like you're like, yeah, so that was like a junior trend line. I'm a trend line apprentice, but I just noticed the market had not been able to make higher highs since prior to, let's just call it that, that big red candle day, the day when
Yep.
everybody was freaking out about rates. And it looks like now it's trying, and I maybe we have a new key level here. I think this is an interesting inflection point.
Well, yeah. Just to let you know, my trend line's a little higher than yours, Andrew.
Yeah.
Go the tops. Yours is coming down a little.
Yeah.
Yes, remember I talked about the head and shoulders possibility. We have a shoulder here, a head, and then a double shoulder on the right. And that 58.68 was the neckline, and it tested it, but it didn't. The median line below there held, and this is called a bear trap, right? Everyone's looking at that line. 58.68 also is the top of the election gap.
Okay.
So everyone's watching that, and it's support here, support. It failed. This was a bear trap. Everyone thinks we're going lower until this day, last Monday. But then what do? We closed the gap. Exactly. That stopped us. So folks, remember the top and bottom of the gap are always support and resistance. That stopped us. We filled the gap. Generally, when you fill the gap, you turn right around and continue in the direction you were previously going.
So right in
up
it.
over here.
So we're now, what's that level at the line there? It looks like we could just sort of, your upper trend line there that you drew.
Up here?
Yep.
What's right there, 59.97. So yeah,
okay. So we're like
actually it's 6,000.
It's crazy, right? At the big number, right?
It is amazing when those line up with those rounded numbers, the 50s and the evens, right? Yeah.
So that's so you look at this, you're like, even though there is definitely some sentiment change about interest rates, traders are still, or this, I mean, it could be from 2020, right? You have a generation of traders after 2020 that saw a huge down move into COVID. And then everything since then, I mean, well, yeah, 2022. So do we have what, a 38% pullback SPX? The Qs got annihilated that year. But they see this, they see, and granted, we've been trading a long time. I've been trading since the Dow was 1,300, I think. That's
me too. I was there with you.
Yeah, but Berkshire Hathaway was like $900, $1,100 a share was 150,000 or something. So anyway, just to let you know, stocks can go up, right? What you see now, 30 years from now, there's something to saving your money when you're younger and buying stocks. So, but it does look like, I mean, and now here's another thing we can discuss. And I was going to discuss it when we hit VIX. Do you want a couple more charts though before we go into kind of the VIX, sort of the VIX roundup? Is there any
real
other
quick,
charts
real quick, what's helping support our rally are rates. The yields are coming down.
Okay.
TNX tells you the yield on the 10 year. So as you can see, it hit a also a gap going back way over here, November of 23 beginning, and that was that resistance, close that gap. But yeah, so bonds have caught a bid with the yields coming down. And we were worried, we've talked about that week upon week with this big major sell-off. The Fed's lowering rates, but yet the bond vigilantes aren't allowing the yields to go lower. Finally, there's some relief here. TLT held my support at 85. Our MACD's crossing over bullish. That maybe bonds may be out of the woods, beginning to be out of the woods here.
Their start of their long climb back and rate yield, I guess more. I think
Possibly.
people would be happier if mortgage rates were below 6%. Probably, I would guess, but it's
Maybe,
another big handle
yeah,
to go
maybe they
to.
don't climb all the way back up, but at least they stop if they could even just sit, right?
Not keep climbing.
Not conflict with the Fed, right? It's just like, Fed, go away.
Well, we've had some, I think also another thing. Now, we know that since at least September, if we go back, let's say looking at, well, I guess I can pull up VIX here on my screen here. Hold on for 1 second, Lewis.
Yeah,
I guess
September
we
is
can roll
when,
into VIX if you're, so here's kind of what so a lot of this, let's go the last, we're going to go last.
September's when the bonds peaked.
Right. And that was right before, again, because I think there was a lot of, let's just call it hope that there would be some kind of control on government spending and things like that. That has waned a little bit since then. Now, here's something that I found interesting. Because there is still the politics around, Trump being inaugurated, his cabinet picks. So this week, his cabinet picks were trotted out in front of the Senate, and I think they did pretty well overall. That's, again, my sense on the whole thing, but it's just observational. And so, which means that likely his agenda has a chance to be moved forward. And I just wanted to notice from the beginning of the week, then you had our CPI numbers. So you had basically, I think, two things that ended up being probably slightly more market positive. And then now we're going to end up with VIX probably closing. Now we have a 3-day weekend coming up. But VIX closing likely at the lows of the week, right? Because now we're setting up for the inauguration and change in power in Washington.
Right.
Which normally, if the market is climbing and we're only, we're relatively close to 6,000, VIX wouldn't be 16, right? It would be more like 13.
I was going to say 14. Yeah.
Yeah, but definitely a lower number than it is
Yeah.
right now. And so okay, we got the bond market, but there's also, I think the market wants to get past the change in power. Anytime there is some uncertainty, they're going to price that in somewhat. And I think that is the area for VIX, which actually sets up a lot of interesting short VIX trades, I think, next week, going into into expiration, because we have Monday, then we're going to have Tuesday trading day, and then Wednesday VIX expiration. So you might not want to be that close. I have some lingering January on, because I thought this would have been settled long ago, but clearly it has not. But I think going into February, the February cycle will be very interesting. As well, we had a split in a volatility product this week.
That's right.
We were very busy.
So exciting.
And so UVIX, just for those that are interested, we have whenever there's a split in a volatility product at Option Pit, it gets us kind of excited. The reason why mostly now, clearly right here, UVIX can spike, right? This is why people like it. This is why people buy it, because you can have those crazy spikes in volatility, and those 2X products can just launch. Just a product like UVIX will launch. However, if the spike in volatility is not maintained, meaning the market keeps going crazy, these products come right back to earth. It literally, like the rubber band, gets stretched up and then it just rips back down. Now, the thing, when you look at a longer term, track record of these, I mean, look at this. This was the August 5th. So, and this is what gets people buying these things. Like, I'm waiting for 200, right? I'm going to spend $54 or whatever. Now, we just split 10 for 1. So everything is 10x what it was just a couple of days ago. But that's what gets people buying these vol products is they see these gaps on the chart and they're like, this is going to, this is my prediction. I think vol's going to go flying because the market's going to sell off for whatever reason.
Right.
And so at Option Pit, we take advantage of these in called special situations, where once they split again, now you want to see, this is a pretty long history of going down. UVIX, I think, has lost 99% of its value since inception, something like that. If I go back 2 years, however you want to call 3,000 down to $29. What is that?
Amazing.
It's definitely about 99% of its value. And it's split
amazing.
3 times at least here in the last few years. So every split is an interesting opportunity to, let's call it to short volatility. And anyway, we're back here once again, and we're moving into we have earnings coming. So far, the bank earnings we haven't even talked banks yet. One thing I want to do is to look at a couple of bank charts like Goldman Bank and JP Morgan, if you want to switch to a couple of charts. So anyway, my VIX thing is VIX should come after the inauguration. So Tuesday, Wednesday, Thursday, Friday, I think we should see anyway, a run down to at least to the low 14s. That would be my guess.
Real quick though, on that Tuesday, Wednesday, Thursday, Friday, you have the earnings on those days? Anything big?
Yep. I have, so on Tuesday, let's see, we have Netflix is the 21st.
Okay.
Schwab, another financial, but bellwether on the 21st. We have Johnson & Johnson, Procter & Gamble. So some kind of like some bellwether, but not really tech.
Okay.
GE, SMC, Texas Instruments. So we don't really have the big tech until the following week.
So your case for VIX still holds, I would say.
Yep. So there's not like we're waiting to like Microsoft, Tesla, and everything is Wednesday the 29th. So, generally with as earnings season comes through, vol slowly goes down through the earnings season. Now, you're going to get such a raft of earnings next week that the market will start to figure out how the earnings season will go. Usually the banks start it, then you have the next wave, and then big tech, if they can keep the momentum going. But I was kind of curious if you want to look at some of the charts, like of the big banks, right? Citi, Goldman, JPM, and we'll switch back to you if you could, Louis. Just how is there like it feels like the banks still trade at a relatively, not a huge multiple, but are still pretty healthy. It is hard for the economy to fall apart when the banks have healthy earnings. So just as a bellwether.
Luis, can you show my screen, please? XLF held my support level here with a nice bullish piercing, and sure enough rallied, and looks like it wants to 50 3/4 and then back up here 51.5. Goldman, nice bounce, nice gap up to support. The median line in Goldman's up here 624. Support will be down there at the bottom of the gap. JP Morgan also right up to that resistance. If it continues, I have 265 up here.
Okay.
258. I did hear though that rumblings on the new administration capping the interest on credit cards, I think it is.
So that would hurt what? Visa, Visa and MasterCard, really, right?
Wouldn't it hurt a lot of the banks, or is it?
Yeah, I guess every bank stock.
I think it would hurt all of them, wouldn't it? I don't know. Maybe just the.
I guess it would be okay for like the Venmos, the PayPals, the Squares, right? Because they don't really hold, as I recall. I'm just curious if one group does better than the other, but that definitely could be a Now, here's another thing. You cap interest rates, and then all of a sudden the credit the credit situation is going to look a lot different for those
Right.
roosters.
Right.
So,
All that
we'll,
debt.
we'll see
I
how
don't,
that goes. We'll see how the lobbying
yeah.
what happens.
Yeah. I highly doubt the banks are going to be able to give up anything or will allow anything, giving up any kind of,
Yeah. I mean, I'm
It's
trying
not
to
gonna-
we've been doing this for 30 years, and when was the last time the banks gave up rates? They're like, okay, we just won't issue credit cards. And they're like,
right.
all right.
Exactly.
It's kind
But
of
it
like
is amazing. Isn't the going rate on a credit card like 24, 25% or something?
yeah,
It's insane.
well, it should make people refinance all that stuff, but I I
But the amazing thing is at those rates, people are highly in debt. So
Yeah.
maybe they should be that high,
to keep people from spending money.
well, to help them not get more debt. I don't know. I don't know the answer, but, or, you know,
That also is a good thing to look at if you're trading going into the next month or two, especially with volatility in the banks now fairly low. The last time I looked here, let's see. Yeah, you can buy volatility in JP Morgan in the teens, the high teens.
yeah.
Bank, same. Wells Fargo, same. All they've smoked it out. It's not as low as it can be, but it's pretty darn low.
Yeah. Once the earnings
So
come out, it'll go a little lower.
right. So you could see a little flutter in the banks from stuff coming out of the administration. Again, it depends who's in the cabinet, how aggressive they are with what's going on. And I think this confirmation week, to get kind of the ball rolling, I think there was a little bit of let's just call it concern or uncertainty around it. It appears that it is sort of coalescing, but we'll see by next week, right? That's the whole. So this is the weirdest thing. You have the 3-day weekend, then you have Tuesday trading day, then you have settlement Wednesday. And it'll be an interesting settle. Like I think in the back of my mind we could settle, I don't know, 1475. Just throwing that, it's totally useless to throw a guess out there, but I don't think it's possible. So
Andrew, can I
yeah.
just say, will your trading vehicle drive us into next week?
Yeah.
I'm so bad. I'm not as good as Mark on the
well, there's a couple of things I wanted to discuss on the trading vehicle this week. Well, you have to take improv classes like Mark does.
Yeah, that's right. He did do that.
Yeah, and he's on TV like 5 times a week, or I don't know.
Yeah, he's very good at it.
He is entertaining. So my trading vehicle is for the week. Funny you should mention that, because when we meet in Baltimore again, I'm going to actually use this, which I never use.
I will be too. Hopefully we'll be
I am going to use an Uber. I am going to. So where I live, there's jokes in Maine, like what's the Maine Uber? It's a horse-drawn carriage, like a hayride, when the Uber comes around. So now there are some things I want to discuss here in Uber, and this is something we've launched at Option Pit, where the idea, what I call like option fingerprints, we do a lot with order flow analysis. Basically, the idea is this, real simply. So, Lewis, if you can show my screen for a second, is when anybody is plunking down, if you're in an institution, many moons ago, and I can't believe I'm this old, but I remember when leaps, you probably do too, but you're much younger than me, Licia.
I'm not, Andrew. I'm not. I think I might be older.
Let's just say when we were younger, they invented leaps. And everybody's like, what's a leap? It's a long-term equity anticipation. I forget what the P's for. I think equity anticipation, I think. But anyway, it's institutions wanted 1 and 2 year options, and they traded over the counter. And I think part of what they also wanted was having the volatilities out 1 to 2 years so they could mark where vol was. They could see how vol was priced, because a lot of upstairs investors, funds, everything still use trading floors to quote and mark volatility. They want to see, you go into the SPX or VIX, or you're going to get a quote for options that you can trade, right? So that the value of the floor versus, how things are being marked upstairs. Like, so if you remember the Big Short, Michael Burry was complaining that his investments, let's just say, which I don't know which bank had the other side of them, but with the mortgage market imploding, how come the value of his swaps and stuff were not going up? He was
right.
Like, wait a minute. So the trading floor provides a volatility mark. And another closet pick I have is CBOE, because their flex product is a OCC regulated over the counter option trade, but you can create whatever you want, but it will be a product that you can mark efficiently. You can't flim flam it around upstairs is the bottom line. So anyway, but these long-term options are a way for institutions to get into a name. So one thing we're doing at Option Pit is we've launched product Flash 10 initially in the fall, where I'm teaching students, or we're walking through like seeing this longer term order flow, right? So when our stock's interesting again, because the institutions are piling in and buying long term options. So that's the idea of the option fingerprint. Like, so the institutions kind of leave their fingerprints all over the place.
And tell us how successful your first go around was,
Yeah,
Andrew.
so
It was
first go
phenomenal.
around, we've had 10 picks, 10 stocks, and 9 out of 10 are up money. A lot of 100% closes in our
Tremendous.
options. So it's been good, and we now relaunched because as the flow kind of moves, which we all know, which is what we like about this game, Licia, right? Is every quarter there's something new, right? There's some stocks that have done well, some stocks that have done bad. And the difference with option order flow, long-term order flow versus just stocks is you don't know who bought what stock, right? Like, so there's a lot where you can see that institutions have acquired stocks, things like that. But that option order flow, the open interest, long-term open interest stays around. It stays around for a long time, and it can grow. So one thing I follow is, once I've got a couple other metrics that I use for when stocks become interesting. And then I look at how the order flow, the open interest, long-term open interest has been changing. Like, so are they getting in again? What I want to do is, I don't want to be the first on the ride. Right? I don't need to catch the falling knife and all that kind of stuff.
Yeah.
I'm not interested in that. I just want that, I want that Uber driver to just arrive and me just to hop in, sort of go and just catch a ride on the next. So that's the rationale behind it. And it's worked very well. And it's something I've done for a long time because as a floor trader, Licia, we would sell long-term calls that were way out of money. And we're like, this is the dumbest. Who the heck is buying these stupid calls? Like, there's no way these calls are going anywhere. And then 8 months later, they're $30 money.
But I have to say, Andrew, but just thinking back on those leaps, when they first listed, we could price them wherever we wanted. Half the crowd was afraid to trade them. We made a lot of money on those.
Yeah.
Until then, when they first came out, it was fantastic.
Yep.
Remember that? People were afraid to trade them, and we're like, oh yeah, we're 4 or 5 on those.
Right.
Right? And the Citigroup leap. That was when they first started. But then, but we had to, because you know, we had interest rates back then. You didn't know what the rate was going to be. You
Right.
know, it was pretty cool. It was fun.
Oh, and then interest rates back then too were like 7-8%.
Yeah.
Right. Totally
And you were
different. And a
going 2 years
1%
out.
change. Right. And a 1% change in interest rates just totally changed the value of the leaps. Like
Right.
crazy.
So it was like a little bit, like a little glimpse of the Wild West, a little bit, just in the beginning, though. It didn't last long.
Right. Maybe a year or two, and then all of a sudden, all the smart guys kind of figured it out. But
Yeah. It was fun though.
But it was a good. But that's again, a lot of trading is just observation, right? So what do you see? What have you seen over and over and over and over again? And this was a way for me to look for stocks that, again, you can buy the hot stock. But, really, I'm just looking for companies that have been around for a while. The market hates them and then wants to like them again. I don't need it to be super. And then sometimes you just hold them for, forever, for 10, 15, 20 years, whatever. So some stocks I've had. So it's just one of those things where now this is a way to look for news. Like you always want to see what's going to be the next NVIDIA, which is very, very hard, right? That's a generational type stock. But heck, you would take a stock that just goes up 80% next year. Who's going to complain about that,
Hell
right?
Yeah.
So one of our picks was Hood, using this thing, using the option fingerprints. We're getting the Hood in the low 20s. And this is after it had run from $12. And this is one of my picks here last year. And this is one of the reasons why, because there was so much institutional buying. It was insane. And now it's a $44 stock. Of course, Bitcoin has taken it, to the moon. But
that's tremendous, Andrew, though. You saw it. You saw it coming and you hopped in. It's phenomenal.
So that's the idea around like option finger. Now there's a few other things I have for metrics that, I share it in Flash 5. But anybody can do this, right? Anybody can, if they want to take the time. That's another thing. There is a certain amount, because there's no easy way to go find the historical data. You got to kind of, look through it. Although we are trying to figure out ways to sort of automate it a little bit. But that's the idea. The idea is you want to see some order flow. Now, a stock that we've talked a little bit about is Uber. Speaking of passenger. And so I was in this week. So this is a stock that I liked with Frank because of the rideshare potential and big cities cutting down on congestion. You remember New York did all that congestion tax and everything, which I think overall cities and rideshare is just going to grow. Like for me living in the sticks, it's not going to happen. But for the rest of the world, especially in crowded cities, I think this is a growth thing. Uber is dominant, and I think it's a reasonably priced stock. But what I thought was most interesting is going out to March. There's heavy. So there's a customer, I believe, here that's been buying these 80s since 99 cents or below. Now today we're going to see how the open interest rolls and what we have for new pricing. But a lot of these traded yesterday. A lot of the 80s traded. Now, again, this isn't a long-term option. I'm still doing some work here on Uber because it hasn't had that massive fall from grace yet, although it was in the 80s and now it's but it was in the 60s, now back to 69. So, but it appears that somebody with some, relatively deep pockets thinks this could be $80 stock by March. We're long. Go ahead.
I was just going to say, people can still get in on your Flash 5. When are you starting?
Yes, the Flash 5 will start next Friday, although I'm probably putting the first stock out today because it's already starting to run. It's possible. Just like the thing with Flash 5 and even Flash 10 was the whole point is that there is some momentum behind these stocks. And, if we would have waited another month for Flash 10, we would have missed 10 stocks going up. So
wow.
like, I don't want to, Yeah. So I don't, it's like one of those things where you want to get the positions on because they are a longer term 6 to 9 month hold.
So you
So
hear that, folks? You can't wait. You have to join Andrew for his Flash 5 before it's too late. We have a big rally. We're approaching 6,000. That will be the key, right? Is
right.
this,
You have to get with it. You have to get
yeah.
with it.
So you need to join Flash 5. Andrew's going to, he had 9 out of 10 last time. Andrew, that's phenomenal. That's a tremendous record.
Yeah, that's pretty good. I'm happy.
Pretty
So,
good. It's
and I
huge.
do, and like I said, Licia and I, we put all our own trades on. So I'm putting on the trades right with my students. Everything I do, like 5 products at Option Pit. So it's a busy day. But right now I think volatility is low in Uber. There is substantial increase in footprint in this thing. Somebody wants it. I don't know who, but it would not surprise me if the stock was $80 in March. And that is my trading vehicle for today. Full disclosure, I'm long stock and options in Uber. So anyway, there we go. Now, I guess really looking forward, putting on our what's happening for the next week. We got a few minutes left, Licia. And I guess the big question really now is like, okay, earnings. What and I think again, a bellwether one that's coming relatively quick is Netflix. And another stock I want to discuss is Meta, right? The Zuckerberg, like the guy somehow he was this one guy and now he's another guy.
Oh, don't get me started. We don't have enough time to go into that. But folks, we do have our ticker highlight show every Monday.
Yep.
Everyone's welcome. Optionpit.com or I'll get the link.
Right.
It's our ticker highlight show. We have it every Monday. We write about a stock. You'll see it in the email, and then we talk about it and choose a trade.
Right.
And, the record for those trades has been very good too.
Yep. So the idea with, Netflix, will see how I guess like tech, social media, it's hard to really, I see Netflix as an entertainment company. But they are the dominant entertainment company. You look at all the other ones like Warner Brothers, Paramount, every other entertainment company, like those stocks are in the basement. And Netflix just keeps flying. So it's literally like Netflix and then all these other knuckleheads trying to provide content.
It's amazing.
Now, and then more and more Facebook is becoming kind of a content thing because of Instagram and all this other stuff. And with TikTok potentially being illegal. So there's a lot of, let's just call it, there's a lot of potential action there as a trade. But I think you're going to get a good sense too on how the market is reacting to a high, let's call it a high beta stock, pretty decent multiple. If there's more appetite to own more of it, that would be my the biggest thing with Netflix next week. Is how much appetite there is for more growth. And we'll see.
Yeah.
So how about, why don't we just hit a couple of key levels in SPX?
Yeah, we're
everybody in ES. As we close, we only got a minute or two left.
We're up over 50 now, Andrew.
Of course. VIX is 1578, and maybe we see the 14 handle today. Oh my gosh.
So folks, put this downward trend line that Andrew was talking about earlier, all our lower highs and lower lows. Put that little downward trend just over here on the left trend line, and just hit those tops. As long as if we can clear that, I say we're going back, new highs, 6,100. But that comes in right at 6,000. So everyone and their mother's looking at that. I think that's the key level today to watch, 6,000. Our MACD is trying to turn bullish too.
if people want to actually get more Licia, we've been talking about me the whole time, which kind of, I don't like to do, as you know.
Andrew, it's all about
more Licia at Option Shopper. She teaches you how to draw trend lines, all pitchforks, all kinds of cool stuff for technical analysis. And she does very well making money at it as well, I would add. So if you actually want to learn from somebody who can do it, Licia's one of the few.
Thank you. Also in the Qs, I have that little downtrend line in the Qs. It comes in around 520, 521.
Two good inflection points right there.
So Qs are testing it right now as we speak. What do you think we're going to do?
I think it's going to break through. Just again, it's like we're going to wait till next week, then break through. Because today's a classic day where it's going to go to the line.
Yeah.
And sit. Because they'll be like, okay, what's going to happen this weekend? What's going to happen? It's like one of those classic things.
And it's a long weekend. People may leave early.
Right. So I think that's kind of what we'll see next week. And then there's a new sheriff in town, and gosh knows what will happen after that. Right. All bets are off.
Right.
All right. Well, I think that was definitely enough show. Check out my Flash 5 at Option Pit. Check out Option Shopper with Licia at Option Pit. And for Licia, the Queen of the Candles, Duchess of Doge, and Director of Technical Analysis at optionpit.com. Me, Andrew Giovinazzi, Director of Education, Your Only Option.
Vicar of the Vix.
Vicar of the Vix. Have a good day.
Thanks.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.